Most people are looking for an online investment to have another stream source of income. Some are looking for an opportunity to attain financial freedom. Little do they know that the popular online investment known as the stock market is like a complex maze. Despite concerns about inflation and the Federal Reserve's tightening measures, 2023 has been a surprising and delightful party for the market, confounding skeptics along the way. While geopolitical events like the Russian-Ukraine war and the Israel-Hamas theatrics add a touch of suspense to the mix. So are you ready to take the plunge into the thrilling roller coaster ride of the stock market? Don't miss out on the opportunity to learn and make sure to watch until the end. Let's now dive into the dynamic world of investments. First on the list and stealing the spotlight is Meta, which was formerly known as Facebook. Guess what? Meta stock is at the edge of an enticing entry point at $326.20, hinting at a second stage cup pattern that could lead to substantial gains. But that's not all. Imagine a golden opportunity to buy at $312.87, resembling a handle in the pattern, a move that exhibits smart decision-making. Meta has proven its resilience, bouncing back near the 50-day moving average despite market turbulence. And the relative strength line? It's soaring high, signaling a company that knows how to shine. Now the question is, what sets Meta apart? Well, imagine a company with a robust EPS rating of 86, securing a top 2% spot for price performance over the past year. That's the kind of positive sentiment that speaks volumes. Recent financial achievements are equally impressive, experiencing a remarkable 32% surge to $2.98 per share in the second quarter. And the revenue? It rose to a solid 11% to a staggering $32 billion. Sure, Meta faced a hefty $10 billion ad revenue setback due to Apple's policy changes, but their strategic advertising and technology led to a remarkable recovery. Positioned as a star player in the AI arena, Meta's upcoming Connect event is set to unveil the highly anticipated Quest 3, their latest virtual reality marvel. Who knows, they might even introduce groundbreaking consumer-oriented AI solutions. Now get ready for another world-renowned tech company. Second on the list is NVIDIA, the mastermind behind specialty chips and AI. Currently forming an enticing cup base, and the buy point is set at $502.66. While trading volumes might be curving, the relative strength line is leaping near its peak, a clear indication of NVIDIA flexing its market muscles. So why should you be excited about NVIDIA? Well, they're not just playing the game, they are acing it. With a flawless IBD composite rating of 99, NVIDIA secures a spot among the top 1% for price performance over the past year. They are a true titan in action. And let's talk earnings. NVIDIA boasts a stellar 96 EPS rating and has been achieving an impressive average growth of 125% over the last 3 quarters. Hold on tight for this next part. Brace yourself for a jaw-dropping surge of 101% in third quarter sales, and analysts are whispering about explosive profit growth of 194% in fiscal 2024. NVIDIA is not just making waves, it's riding a tech tsunami. Sure, competition in AI chips is heating up, with players like Microsoft entering the scene. But NVIDIA remains stable. They have a trump card up their sleeve, the GH200, and their next-gen AI superchip. NVIDIA is now ready to revolutionize the industry in the coming year. Now, are you ready for the pumps that will happen soon? Third on the list is another tech company, the master of cloud computing wizardry, Arista Networks. Imagine a stock hovering near its 10-week moving average, teasing a flat base with an irresistible buy point at $198.70. It's trading slightly above the 21-day exponential moving average and confidently cruising over 2% beyond the sacred 50-day line. This stock isn't just performing, it's putting on a remarkable show. Now let's talk ratings. Arista Networks is a near-perfect performer with an impressive IBD composite rating of 98. When it comes to earnings, this company is a rock star, boasting an average EPS growth of 63% over the past 3 quarters. And here's the icing on the cake. Arista Networks leads the charge in the highly competitive computer networking industry group. Additionally, big money is taking notice too, as it earns a solid B accumulation distribution rating. But here's where things get really exciting. Arista Networks isn't just riding the tech wave, it's boldly stepping into the future of artificial intelligence. During the early earnings call, CEO Jayshree Ullal hinted at the company's commitment to AI investments. Imagine being part of a company that not only adapts but thrives in the ever-evolving landscape of AI. It's truly exhilarating, isn't it? So buckle up and get ready to ride the tech whirlwind with Arista Networks. Wait a minute, another tech company? Tech company sure is conquering the stock market. Fourth on the list is the Vertex stock. Yes, it might have experienced a recent dip, but here's the deal. It's still in the buy zone after conquering the flat base entry at $40.41. This stock isn't just performing, it's flexing some serious financial muscles. Imagine a stock that not only recovers but soars to new heights. Vertiv's relative strength line is breaking records, showcasing its strength with a perfect IBD composite rating of 99. That's like being in the top 1% for price performance over the past year. A true power move. Now let's talk about Vertiv's expertise. They are the maestros of IT components and maintenance services for data centers, cloud networks, and more. They craft power and thermal management devices like no other. But here's the showstopper. Vertiv has achieved triple-digit earnings growth over the past 3 quarters. In the second quarter, they hit the high notes with a remarkable 360% rise in EPS to 46 cents, and sales reached a record-breaking $1.73 billion. Analysts are already projecting a blockbuster fiscal 2023 with an estimated earnings growth of 204%. Vertiv is not just a stock, it's an investment symphony waiting to be conducted. Now we're on the finale. It might be the last, but it's not the least for sure. Imagine a stock that not only clears obstacles, but does it with style. Zscaler has just aced a shallow cup-like pattern, giving a green light with an entry point at $167.50 and a buy zone stretching up to $175.87. Now I know it's more than 10% above its 50-day line, which might make some cautious investors pause. But here's the good news. The relative strength line is flexing near its highs, showcasing resilience even when the market goes on its roller coaster ride. Let's talk about the stars. Zscaler shines bright with a perfect IBD composite rating of 99. With a 53% gain in 2023, Zscaler is confidently strutting its stuff. But here comes the pinnacle. Recent earnings didn't just meet Wall Street expectations. They surpassed them with flying colors. And guess what? The outlook for fiscal 2024 is nothing short of exciting. Earnings per share are projected to be between $2.20 and $2.25, with revenue of $2.06 billion. Now I understand that there's a projected slowdown in sales growth for fiscal 2024, but here's the thing. Zscaler isn't a one-hit wonder. It's the rock star of the cloud-based data security market. With a global platform that's like an upgraded tank, Zscaler isn't just riding the cloud wave, it's leading the parade. Analysts like Kidron Singh are already nodding to the beat of Zscaler's drums in their ever-evolving landscape. Are you ready for the encore? Get ready to witness the continued success of Zscaler in the exciting world of cloud-based data security. Although 2022 started strong, recent market fluctuations have placed the uptrend in a precarious position. As a result, it's advisable for investors to adopt a defensive stance and temporarily stop purchasing stocks unless exceptional breakouts occur in top stocks, such as those found in the IBD 50. It's crucial to remain aware of sell signals. Setting a loss trigger at around 8% can help protect your investments. Additionally, ongoing factors like inflation and geopolitical events, such as the Russia, Ukraine, and Israel situations, introduce headline risk. By patiently waiting for favorable market conditions, identifying exceptional breakout opportunities, and keeping a watchful eye on sell signals, you can navigate the market with confidence. And that concludes today's video. We sincerely hope that the information we've shared has shed light on selecting the ideal stock to invest in at the moment. If you found this video exciting, then you're in for a treat with our next video. Until next time, have a fantastic time discovering the best stock to buy now and beyond.